Hey guys, I'm getting the recording started and everything. We'll get started here in a couple of seconds, just hopefully waiting for a couple more people. I'm also recording it though, so you can come back and watch it later should anything happen, okay? But basically what we're gonna do here is spend like 20 minutes or so kind of going over some ways that you can remember debits and credits and kind of how they work, okay? I am gonna share. I don't know if I can share it on here. I can make an upload really quick for y'all. For a couple of things while we're waiting. Let's see if it'll load. Sometimes they will, sometimes they won't. So that should load. If not, I can load it later too. It's just kind of a little debits and credits thing that you can kind of look at to remind you of where things go. But I'm going to go ahead and get started with this stuff. Okay, so we know so far the accounting equation. Some of you might be in my online class, which is in chapter 2 right now, and some of you might be in my virtual class, which is on chapter 3. So we've kind of looked at the accounting equation going so far. And what I want you to do is I want you to think of the accounting equation as kind of split at that equation sign. Okay, we've got the asset side, we've got the liabilities and stockholders' equity side. And I want you to think of something that we commonly talk about and that you'll talk about more and more as we go throughout is going to be the T accounts. And a T account is kind of like a small representation of an account. So it could be anything. It could be, the cash account. Okay. And the cash account has a T account. And on every single account, it's got debits on the left and credits on the right. Okay. I can share some videos with you. You can Google it, look it up on YouTube. Every single time you're doing accounting stuff, it's going to be debits on the left, credits on the right. Now, at this moment, I want you to ignore your checking account. I want you to completely take that out of your brain, and I want you to not think about it. And I will come back to the way things work on your checking account. But right now, I need you to look at this way and kind of clear your mind of all your previous thoughts of debits and credits. Okay? So debits on the left, credits on the right works the exact same way for the accounting equation. We've got debits on this side, credits on this side, okay? Easy ways to remember this would be like Washington, D.C. Okay, or DC Comics, okay? Those tend to be the easy ways for you to be able to remember debits on the left, credits on the right, okay? So for the main accounting equation, debits are going to increase the items on the left-hand side. And credits are going to increase the items on the right-hand side. Okay. So then the opposite is true for each of these as well. So on the left-hand side, credits are going to decrease your assets. Okay. Debits are going to decrease your liabilities, and debits are going to decrease your stockholders' equity. Okay. So main thing to know, debits left, credits right. Debits increase the main item on the left-hand side, assets of the equation, and credits increase the main items on the right-hand side, which are liabilities and stockholders' equity. Now, I know it gets a little more difficult from here. So I'm going to pull up the expanded accounting equation, okay? So here's the expanded accounting equation, okay? Assets, liabilities, and stockholders' equity. At this point, you've definitely gone through the balance sheet so that you know that common stock and retained earnings make up stockholders' equity, okay? And then we finally got revenues and expenses and dividends. Those make up retained earnings. expenses and dividends reduce retained earnings. And revenue obviously increases retained earnings, okay? So let's go back to what we already know. Assets increase with a debit and decrease with a credit. Liabilities increase with a credit and decrease with a debit. Stockholders' equity increases with a credit and decreases with a debit. Now, both common stock and retained earnings increase stockholders' equity. Okay, so their impact on stockholders' equity is to make it increase. An increase in stockholders' equity is a credit. So both of these increase with a credit and decrease with a debit. Okay. Next up, we look at the impact of revenue, expenses, and dividends on retained earnings. Okay. So revenue increases retained earnings. Okay. So when revenues increase, retained earnings increases. So that's going to be a credit. Credits increase for revenue and debits decrease revenue. Now, expenses and dividends both reduce retained earnings. So they have an opposite effect when they increase on retained earnings. So these two are like special ones, okay? Both of these will increase with a debit and decrease with a credit. And this is because of their impact on retained earnings, okay? I know that those can be a little bit tricky. The best case that you can do when you're first learning about this is to work on some ways that you can memorize, okay? So I'm going to grab a piece of paper here. I'll show you some memorization techniques that you could use, okay? The first one I'm going to work with is the dealer, okay? So let's start with that one. And you can write a T account and you write D-E-A-L-O-R, okay? This side increases with a debit. This side increases with a credit. Okay, so dividends, expenses, and assets all increase with a debit. Liabilities, owner's equity, which is the same as stockholders' equity, and revenues all increase with a credit. All right. Now, real quick, before we go back into some more memorization techniques, your checking account. Your checking account, okay, this is something that the bank is handling. And this is a liability account for the bank. Let's say it's Bank of America, okay? Liability for banks. So the reason that your checking account goes up with credits and down with debits is because it's a liability account. And liabilities increase with credits and decrease with debits. Okay, so another way besides the dealer that you could do, some people also do this one. It goes D-E-A-D, which is perfect for Halloween coming up. C-L-R-C, like dead clerk. Okay. And so you've got debits on the left, and those are expenses, assets, and dividends. Okay. On the right, you've got credits, and those are liabilities, revenues, and common stock. Most of my students either use the dealer method or they look at the accounting equation. Okay. And one more thing I want to do for the accounting equation is I want to kind of draw something out. So we've got that assets equals liabilities plus stockholders' equity. And something else you can do for your own notes, okay, is all these are debit on the left, credit on the right. Okay. Assets increase with a debit, decrease with a credit. Liabilities increase with a credit, decrease with a debit. And stockholders' equity increases with a credit, decreases with a debit. Stockholders' equity is made up of common stock and retained earnings. Again, debits on the left, credits on the right, always, always. Okay. So common stock increases with a credit, decreases with a debit. Retained earnings increases with a credit, decreases with a debit. And then over here, we're going to take this one, okay? And we've got revenue, expense, dividend, okay? Okay. And so we've got debit, credit, debit, credit. Debits on the left, credits on the right. Revenue increases with a credit and decreases with a debit. Expenses increase with a debit, decrease with a credit. And dividends increase with a debit and decrease with a credit. Any of these are completely fine in the way that you're going to remember it. I just really, really recommend working through chapters 2 and 3 as you have the time now to go ahead and memorize it, because you're going to need to know it pretty much for the rest of the class. So it's extremely important that you just go ahead and commit it to memory, whichever way works best for you, whether it be the accounting equation, dealer, the clerk, or breaking it all down and having it all written down. Any of these ways is completely fine, but it's just something you're going to need to know, and eventually it will continue to make sense as you keep going. Okay? Does anyone have any questions? Okay, well, that's what I have for you. This has been recorded, so I'm going to save it and I will post it up once it's all saved, okay? Okay, have a good day.